Somewhere far from your home, ships full of oil are slowly moving through a narrow stretch of water while a dangerous war tension grows nearby. Most people going to work today may never hear the name of this place, yet their future gas prices quietly depend on it. This thin water passage sits between powerful nations, and right now rising conflict between Iran and Israel has pulled the world's attention toward it. According to reports, if fighting spreads or shipping feels threatened, the global oil system could suddenly face serious pressure. That pressure would not stay in the Middle East for long because energy connects every modern economy. When energy moves smoothly, the world feels stable. But when energy routes become uncertain, the entire system can shake. This small channel carries close to 1/5 of the oil the world burns every single day. Imagine 20 trucks delivering fuel to the global economy and 4 of them squeezing through one narrow gate. That gate is the passage the world is watching right now. The strange part is that most workers and families have never heard of it before. Yet tankers passing through this water carry billions of dollars of energy in a single trip. When dozens of those ships move every day, the value flowing through becomes enormous. Some estimates suggest the yearly value of oil moving through this area reaches into the trillions. Trillions of dollars quietly moving through a space that looks tiny on a map. When billionaires like Warren Buffett talk about investing billions, people pay attention. But the oil system moves money far larger than even the biggest investors control. Elon Musk may run companies worth hundreds of billions of dollars. Yet even the supply chains behind Tesla cars depend on energy ships crossing oceans safely. Jeff Bezos built Amazon into a company worth over $1 trillion. But every package Amazon delivers depends on trucks and planes powered by fuel. That means the oil system touches even the biggest companies on Earth. Now imagine a worker driving 30 minutes to a job each morning. That worker may spend a few $100s a month on gasoline just to keep life moving. If oil prices jump sharply, that worker feels the change immediately. Meanwhile, billionaire watching markets may see the move as numbers on a screen. This difference is why energy shocks feel personal for everyday people. Right now, tension between Iran and Israel has placed this oil route under the global spotlight. According to public reports, both sides have exchanged threats and warnings in recent months. Some analysts say the conflict may increase the risk around shipping lanes in the region. Even the possibility of disruption can make traders nervous. Oil markets react quickly when supply looks uncertain. A rumor alone can sometimes move billions of dollars in energy markets within hours. That is because oil is still the main fuel behind the global economy. Trucks delivering groceries use it. Ships carrying electronics across oceans use it. Planes flying between continents use it. Factories making everyday products often depend on it as well. Even many plastics and chemicals begin with oil as a raw material. That means a change in oil supply spreads quietly through thousands of industries. When energy costs rise, transportation costs rise. When transportation costs rise, product prices begin creeping upward. Eventually, the impact reaches ordinary families. A gallon of gasoline climbs higher, a grocery bill grows heavier. A small business sees shipping expenses increase. Meanwhile, global investors start adjusting portfolios worth billions. Hedge funds managing tens of billions watch oil futures carefully. Banks handling trillions in assets run risk models every hour. Governments with national budgets in the trillions monitor the situation closely. Because energy supply routes can influence inflation across entire countries. Central banks worry when energy prices jump quickly. Higher fuel costs can push inflation upward again. That can make interest rates stay higher for longer. And higher interest rates affect mortgages, loans, and business investments. Suddenly, a small waterway becomes part of a giant financial story. Imagine a bridge carrying most of the traffic in a large city. If that bridge closes, traffic chaos spreads everywhere. The oil passage we are discussing works very much like that bridge. Ships loaded with 2 million barrels of oil pass through it regularly. At current prices, that cargo alone can be worth hundreds of millions of dollars. Multiply that by many ships each day, and the scale becomes massive. This is why military tensions near this area worry global markets. Investors remember past moments when oil routes became unstable. In those moments, prices sometimes jumped very quickly. Fear spreads through markets faster than most people expect. The world economy today is also carrying huge levels of debt. Governments owe trillions of dollars. Companies owe trillions more. Households also carry mortgages, loans, and credit balances. When energy becomes expensive, it adds pressure to that already heavy system. A billionaire may see oil volatility as a trading opportunity, but a family trying to save for retirement sees it as a financial stress. That emotional gap between wealth and everyday life becomes clear during energy shocks. Right now, the global system is watching the Middle East very carefully. Because the Iran and Israel conflict is happening close to one of the most important oil routes on Earth. According to analysts, even short disruptions could move markets sharply. Tanker companies are already discussing safety and insurance risks. Insurance costs for ships can rise quickly when conflict risk increases, That cost eventually shows up in the price of transported oil, and that price slowly moves through the entire economy. It might begin quietly in energy markets, then it spreads to transportation companies, then to shipping costs for goods, then to the price tags people see in stores. This chain reaction can move faster than most people realize. That is why global investors watch this narrow waterway so closely. It may look small on a map, but the economic weight moving through it is enormous. Trillions of dollars of energy trade depend on stability there. When tension rises near such a critical point, the world starts paying attention. And right now, that tension appears to be growing quietly. The world has faced oil disruptions before, but today the global system is far more interconnected than it once was. Markets move faster and supply chains stretch across continents. That means a shock in one place can travel across the planet very quickly. And that is why this small waterway near a rising war could soon affect millions of ordinary lives. What makes this moment unsettling is not just the war tension itself, but how fragile the global energy system already feels. The world economy is running on a huge engine that burns millions of barrels of oil every single hour. Every day, roughly 100 million barrels of oil are used across the planet to keep life moving. A large portion of that energy still travels through the same narrow water route near the Iran and Israel tension zone. According to public energy data, about 20 million barrels can pass through that corridor each day. That amount of oil alone is worth billions of dollars before the sun even sets. When traders in New York, London, and Singapore see risks around that supply, prices often react quickly. Oil markets move fast because energy shortages can create immediate economic pain. A billionaire investor might see oil charts changing on a trading screen worth billions. But a delivery driver filling a fuel tank sees the change in a much more personal way. That driver may earn a few $1,000s a month, and fuel costs are part of survival. Meanwhile, people like Elon Musk, Jeff Bezos, and Warren Buffett operate inside financial systems worth hundreds of billions. Buffett once moved tens of billions into energy companies during uncertain times. Musk runs companies valued in the hundreds of billions. Yet even those companies depend on global shipping and energy stability. Bezos built Amazon into a giant worth more than $1 trillion. But even Amazon's massive delivery system depends on trucks, planes, and ships powered by fuel. This is why the oil route near this conflict is so important to the global system. If ships slow down there, the ripple spreads into industries everywhere. Shipping companies begin calculating longer routes around other oceans. Those routes can add thousands of miles to a single journey. More miles mean more fuel burned. More fuel burned means higher transportation costs. Those costs slowly move through supply chains like a quiet wave. Soon companies raise prices to protect profits. Consumers begin noticing that everyday goods cost a little more again. This is how an energy disruption quietly becomes an inflation story. Inflation is simply when everyday things become more expensive for ordinary people. Governments and central banks watch this carefully because rising inflation can damage economic stability. When inflation rises too quickly, interest rates often remain high. Higher interest rates make loans more expensive. Mortgages become heavier. Business borrowing slows down. Investment decisions become more cautious. Suddenly, one narrow waterway connects to the entire financial system. According to market analysts, even a short disruption could move oil prices dramatically. Some past supply scares have pushed oil prices up by tens of dollars per barrel in a short time. When multiplied across millions of barrels, that change equals billions in new costs. Hedge funds managing billions watch these movements constantly. Large banks handling trillions in global assets model these scenarios every day. Government energy departments also track the flow of oil tankers through satellite data. They understand that this passage is one of the most sensitive pressure points in the world economy. Now add the emotional layer of a growing conflict between Iran and Israel. War does not need to fully block the route to create stress. Even the possibility of attacks or shipping risk can create fear. Fear changes behavior quickly in financial markets. Traders begin buying oil futures to protect themselves. Companies rush to secure supply contracts. Insurance companies raise the price of covering tanker ships. These changes begin quietly, but the financial numbers involved are massive. A single large tanker can carry oil worth over $200 million. Imagine dozens of those ships moving through a narrow path every day. The combined value becomes staggering. Billionaires and sovereign wealth funds may see opportunity during these moments. Some investors profit from volatility in energy markets. But ordinary workers mostly feel the cost side of the equation. When gasoline prices jump quickly, family budgets feel the shock immediately. For someone earning $50,000 a year, fuel costs are a real concern. For someone controlling billions in investments, fuel costs barely register. This is the quiet divide between financial markets and everyday life. Right now, that divide may grow wider if oil routes become unstable. Global markets also remember previous oil shocks. Those moments often triggered sudden waves of fear in stock markets. Airlines, transportation companies, and manufacturing stocks sometimes fall when oil surges. Investors worry that higher energy costs slow economic growth. When growth slows, corporate profits can shrink. When profits shrink, stock markets react quickly. This is why Wall Street watches Middle East energy routes closely. The stakes are not just regional politics, but global economic stability. At the same time, governments prepare emergency strategies if supply becomes threatened. Some countries keep strategic oil reserves worth billions of dollars. These reserves are emergency fuel stored underground for crisis situations. The United States alone has held hundreds of millions of barrels in reserve during past crises. Releasing those reserves can temporarily calm markets, but they cannot replace global supply forever. The world still needs stable shipping routes to keep energy flowing long term. That is why diplomats and military planners treat this waterway with extreme seriousness. It is not simply a regional shipping lane. It is a global economic lifeline. Right now, that lifeline sits uncomfortably close to rising military tension. The Iran and Israel conflict adds another layer of uncertainty to an already complex system. Many observers say the situation could remain tense for some time. Others believe global powers will work hard to prevent any shipping disruption. No one knows exactly how events will unfold, but markets are already watching carefully. When traders see uncertainty, they start adjusting prices early. That means the economic ripple can begin long before any real disruption occurs. Energy markets often move on expectations rather than confirmed events. This makes the situation feel unpredictable for ordinary people. A worker may wonder why gasoline prices suddenly start creeping upward. The answer often begins thousands of miles away in places they may never visit. Right now, one of those places is a narrow oil passage near a growing geopolitical conflict. If you are watching the global economy closely, this is one of the signals worth paying attention to. Because when the world's main energy routes feel pressure, markets rarely stay calm for long. The next stage of this story depends on how governments, markets, and the conflict itself evolve, and the chain reaction could reach much further than many people expect. To understand why this moment feels different, you have to step back and look at the bigger machine running the world economy. The modern financial system is built on energy moving smoothly from one place to another. Oil powers the ships that carry products, the trucks that deliver food, and the machines that build cities. When energy flows normally, the economic machine hums quietly in the background. But when energy routes come under pressure, the entire machine can begin shaking. Right now, the tension between Iran and Israel sits very close to one of those critical energy arteries. That does not mean the passage will close tomorrow, but the risk alone is enough to make markets nervous. Markets dislike uncertainty more than almost anything else. When uncertainty rises, investors begin preparing for multiple scenarios. Some traders start buying oil early, hoping to secure supply before prices rise further. Others begin selling stocks tied to transportation or manufacturing. These decisions can move billions of dollars within minutes. A hedge fund managing $20 billion may shift large positions overnight. A global bank controlling trillions in assets may update risk models instantly. Meanwhile, the average worker may only notice a slow change at the gas pump. That quiet difference between massive financial power and everyday life is striking. Jeff Bezos can move billions through markets with a single strategic decision. Elon Musk can influence global investors with one announcement worth hundreds of billions. Warren Buffett has built an investment empire exceeding $100 billion in personal wealth. But a family with a $50,000 income must think carefully about every weekly expense. When oil prices rise, that family feels the change long before billionaires do. This is why energy shocks create emotional reactions among ordinary people. They feel like invisible forces suddenly reaching into everyday life. Right now, the oil system already faces stress from multiple directions. Global demand for energy remains very high as economies continue growing. At the same time, geopolitical tensions have increased in several regions. The Iran and Israel conflict is just one of the pressure points markets are watching. When several risks appear at once, traders begin thinking about worst-case possibilities. They ask simple questions that carry enormous consequences. What if tanker traffic slows through the narrow passage? What if insurance costs make shipping more expensive? What if countries begin stockpiling oil out of fear? These questions can push prices higher even before any real shortage occurs. Markets move based on expectations about the future. Sometimes the expectation of trouble becomes powerful enough to change behavior today. Imagine a global highway where thousands of trucks carry food and fuel every day. If drivers hear that a key bridge ahead might close, they begin searching for alternate routes immediately. An energy shock could add another layer of pressure. Meanwhile, wealthy investors may treat volatility as an opportunity. During past oil spikes, some traders made billions betting on rising energy prices. Large commodity funds sometimes profit during turbulent markets. But for ordinary households, volatility usually feels like instability rather than opportunity. This emotional difference is important to understand. Financial markets are built to absorb risk and profit from movement. Families simply want stable prices and predictable expenses. That is why energy disruptions can quickly become political and social issues. Governments face pressure to respond when fuel costs rise sharply. Some countries may release oil from strategic reserves. Others may try diplomatic solutions to reduce tension. Military forces may even increase patrols to protect shipping lanes. The Iran and Israel tension is not just a regional dispute. It sits near one of the most important valves in the global energy system. If that valve tightens even slightly, pressure spreads everywhere. Some experts compare the oil system to a giant network of pipes. Each pipe carries energy needed by different parts of the world economy. Millions of barrels pass through it every day. When billions of dollars of energy flow through a single location, the stakes become enormous. Global markets understand this very clearly. That is why even small developments in the region can trigger large reactions in energy trading. Traders watch satellite images of tanker traffic. Analysts study military movements and diplomatic signals. Governments monitor shipping security and insurance markets. All of this attention focuses on a narrow stretch of water that most people have never seen. Yet the outcome could influence inflation, markets, and economic growth around the world. For ordinary people, the situation may feel distant and confusing, but the economic connections are surprisingly direct. When oil markets shift, everyday prices often follow. When prices rise, household budgets feel the pressure. That pressure can slowly change spending behavior across entire economies. A family may delay buying a car or taking a trip. Businesses may pause hiring or expansion plans. These small decisions eventually appear in national economic data. And that is how a conflict near a distant waterway can quietly influence millions of lives. The next question is how this pressure could spread through markets and what signals people should watch next. Now, the biggest question people quietly ask is what happens next if tension near this oil route continues rising? No one can predict the future with certainty, but the global system often leaves small signals before big shifts appear. Those signals usually start inside financial markets long before everyday people notice anything unusual. Oil traders in New York, London, and Singapore watch tanker movement data every single day. Satellite systems track the location of ships carrying millions of barrels of oil across the ocean. If tanker traffic slows near the narrow passage, analysts usually notice very quickly. Even small changes in shipping patterns can influence billions of dollars in market expectations. Another signal markets watch closely is insurance pricing for cargo ships. When conflict risk rises, insurance companies often raise protection costs for vessels traveling through that region. Those insurance increases may seem technical, but they quietly influence global oil prices. A single large tanker can carry oil worth more than $200 million. Protecting that cargo becomes extremely expensive when war risk appears nearby. If insurance costs double or triple, energy companies pass those costs into the price of oil. That price slowly moves through the entire economy. A billionaire investor watching commodity charts may see a profitable opportunity. But a worker filling a car with gasoline feels the effect in a much more direct way. Elon Musk may manage companies worth hundreds of billions of dollars. Jeff Bezos may control an empire that once reached over $1 trillion in market value. Warren Buffett may allocate billions into energy investments during uncertain times. Yet a worker earning $40,000 or $50,000 a year must calculate every weekly expense carefully. When gasoline climbs higher, that worker notices immediately. The same is true for small business owners operating delivery vans or trucks. Rising fuel costs can quickly squeeze profits for small companies. This is why energy disruptions often create widespread anxiety among ordinary people. They touch daily life in ways financial headlines cannot always explain clearly. The conflict between Iran and Israel has placed this critical oil route under unusual global attention. According to reports, several governments are already monitoring the situation carefully. Military forces from major countries sometimes patrol nearby waters to ensure shipping safety. Diplomatic discussions also attempt to reduce escalation in the region. These efforts exist because the stakes are enormous for the global economy. Trillions of dollars of energy trade depend on stability in that narrow passage. If the route remains open and secure, markets may gradually calm down again. But if tensions increase, the ripple could move further into global markets. Energy prices could react quickly to any perceived threat to supply. That reaction might spread into inflation expectations across many countries. Central banks would likely watch those developments very carefully. When energy prices climb rapidly, inflation can rise again after periods of stability. Higher inflation sometimes forces central banks to keep interest rates elevated. Higher interest rates affect mortgages, credit cards, and business loans. Suddenly, a distant shipping lane connects to household financial stress. This chain reaction shows how interconnected the modern world has become. A narrow waterway thousands of miles away can influence everyday life in Western cities. Markets often respond to pressure gradually before a larger movement appears. Investors start adjusting portfolios quietly before major headlines arrive. Hedge funds controlling billions may begin positioning for possible energy volatility. Large banks with trillions under management update economic forecasts. Governments examine emergency energy reserves just in case supply disruptions occur. These actions rarely create immediate panic. Instead, they represent preparation inside the system. Preparation signals that people responsible for managing the economy are paying attention. For ordinary families, the most important step is simply awareness. Understanding how energy routes affect prices helps explain changes in everyday costs. If gasoline or transportation costs begin rising again, the cause may not always be local. Sometimes, the origin begins far away in global supply chains. Watching energy prices and shipping news can provide early clues about economic pressure. Another signal worth observing is how governments respond diplomatically to the conflict. If negotiations calm tensions, markets usually relax quickly. But if political rhetoric becomes more aggressive, traders often grow cautious again. Markets tend to move on expectations long before confirmed events happen. That means oil prices can rise simply from fear of possible disruption. This may sound unsettling, but understanding the system removes some of the mystery. The global economy is like a huge network of pipes carrying energy and goods. When pressure increases in one pipe, the entire network adjusts. Right now, the pipe the world is watching sits near the Iran and Israel conflict zone. Billions of barrels and trillions of dollars depend on stability there. And when global investors speak about risk, this is the kind of location they often mean. A place small on the map, but enormous in economic importance. Billionaires analyzing markets may see it as a strategic variable, but ordinary workers see the outcome through everyday prices. That difference explains why energy stories often feel personal for millions of people. At the same time, it is important to stay calm and realistic. Global energy systems have survived many tensions and crises before. Governments, companies, and international organizations all have strong incentives to keep oil flowing. Disruption harms almost every economy involved. That shared interest often pushes leaders toward protecting major trade routes. Still, the situation reminds us how fragile the global system can sometimes appear. Trillions of dollars of economic activity rely on stability in a few critical places. When tension rises near those places, the entire world begins watching closely. The narrow oil passage near the Iran and Israel conflict is one of those places today. For now, ships continue moving through the corridor, carrying the fuel that powers the world. Markets continue observing every signal for signs of change. Governments continue preparing quietly behind the scenes. Investors continue adjusting expectations about energy and inflation. Meanwhile, ordinary people continue driving to work, buying groceries, and planning their futures. The connection between these everyday moments and global energy routes may not always be visible, but the connection is very real. A small change in global oil flow can slowly influence prices everywhere. That influence can reach households thousands of miles away. Understanding this connection helps remove some of the confusion when markets suddenly shift. It reminds us that the global economy is a tightly connected system. One narrow waterway can quietly hold the weight of trillions of dollars of trade. When conflict appears near that point, the entire system feels the tension. And right now, the world is watching carefully to see whether stability holds, because the outcome could influence energy markets, inflation, and economic confidence across the globe. And sometimes, the most powerful forces in the global economy begin in places most people have never even heard of. The global system moves trillions of dollars through places most people have never even heard of. And when those places become unstable, the impact can reach your job, your savings, and your future. If you want simple explanations about the forces quietly shaping the world economy, subscribe to Market Mindset and stay with us. And before you leave, tell me something in the comments. Do you think this oil route will stay stable, or could the world be heading toward another energy shock?